Welcome back to another episode of the Tailored Property Wealth Podcast. If you are watching this via YouTube and you're watching this via video and not audio, you'll know what I'm talking about when we've given, the backdrop of the podcast a little bit of an uplift, get it a little bit sexier in here. So hope visually it's starting to look a little bit better and we'll continue to improve upon that. Brisbane is still primed for growth, going to continue to perform, and it's a really good long performer. I'm sure you've probably heard that Brisbane is holding the 2032 Olympics, so massive amount of infrastructure spending going on at the moment. Why the Brisbane property market? And there's so many different reasons, right? Vacancy rates are also a precursor for growth. Those renters become purchasers, more people are purchasing, more demand, more price growth. Over the last 12 months, rental income growth has increased 6.3%. Brisbane's population is set to hit 1.55 mil by 2041. As that continues to grow, it's just going to continue to create the pressure cooker for growth. Affordability. Brisbane has overtaken Melbourne. Look at that median value. So if median value is low, income levels are high, we know there's more room there to grow. I've managed to build a multi-million-dollar property portfolio in just a few short years, and I want to inspire and motivate other Australians that if I can do it, so can you. The Tailored Property Wealth Podcast has been created to help educate, mentor, coach, and support you through everything relating to property investing to make sure you go out there and make a much better educated decision when investing in property. Please like, share, subscribe, and share this podcast with anyone who you think might see value in it. This episode today, we are talking about why the Brisbane property market, why we like it, why we think it's going to continue to perform, why we're investing in that personally and for clients at the moment. And it is because it is a really good long-term performer. So let's get into the episode today. We're going to be talking about vacancy rates, gross yields, affordability, and just lots of other things that are going on within the economy of Brisbane and the Brisbane property market. That is what we believe is going to set it up for success, right? It's performed really well, and I'll go through some of that data in a moment over the last couple of years, but we think it's still got a lot in the tank. So let's get into it. And just to start off with, this is not really specific to Brisbane as such, but it's just some good things to pay attention to when you're out there thinking about whether to purchase or not. We touched on this on some of the last episodes. Do we think it's going to crash? Do we think it's going to boom? And there's so many reasons why it's going to perform. But it's just important to note that there's always going to be noise in the media saying that there's going to be crashes. This is going to happen. That's going to happen. And it's really important to block that shit out and just keep on focusing on moving forward, taking action, and holding property long term. Don't get caught up in the short term noise about rates that have happened for the last 2 years. It's not going to last for the next 20 or 30, which is when you're ideally holding a property for. Yes, you might sell one or two of those down the track, but if you're wanting to be a property investor, if you're starting in your 20s, your 30s, you're going to have this property until you're 60, and you're going to have it for a long period of time. So you want to make decisions on long term consequences, not that short-term stuff. Now, babbling on, let's get to it. So back in, when was this? So price drop predicted 20% in the next 18 months. That was about 2 years ago from NBN News. Bricks and Slaughter, 2018, 60 Minutes, still up on their YouTube channel. I went back and I found it, predicting prices to fall 40%, and they went to town on that with multiple episodes. Even the RBA predicting in 2020 in August that there's a potential for a 40% drop in house prices. It just shows you that mainstream media have zero sense of what they're talking about, and even some of the big players out there that make predictions get it extremely, extremely wrong. So since the onset of COVID, I won't touch on every metro, but I'll just touch on a couple. So since the onset of COVID, May 2024, CoreLogic have confirmed Brisbane has increased 59.8%, Adelaide has increased 61%, and Perth has increased 62.6%. So if you've gone out there in the last 4 years in those locations and purchased property, you have done extremely well. Brisbane even kind of went through a little bit of a hiccup there for a period of time when the rates started to happening, but then it just kept churning away. Holistically, some of those markets just continue to perform the whole way through. So if you could have purchased 4 years ago, 3 years ago, 2 years ago, and you've sat there waiting for this perfect day, you've sat there for rates to drop a little bit, the reality is you've cost your cash flow way more than any repayment or interest rate you're trying to save, because you have to go out there now and borrow a massive amount more to purchase the same property. Not to mention that your gross yield is going to be lower than in the last couple of years. So it just makes zero sense if you're like, I'm just going to wait for rates to go down, because in 12 months' time, your gross yield's going to be down anyway, and you're not going to be any better off cash flow-wise, and you're just borrowing way more to get that same asset. All right, so cool. Let's get into why the Brisbane property market. And there's so many different reasons, right? Let's go through vacancy rates first. So as of June 2024 per SQM Research, when the most recent data is available, Brisbane holistically as a city is sitting at 1.1%. Now, since the start of 2002, that vacancy rate has increased from roughly 0.7% in March 2022. So we're talking 0.5%. 1.1% is still chronically undersupplied. Still many locations we're targeting have vacancy rates below 1%. And the reality is when landlords continue to be demonised, those vacancy rates aren't going anywhere, especially when stock levels can't keep up with population growth and the people coming into the country. Vacancy rates are also a precursor for growth. A lot of people that are out there renting can actually buy. So because of that, they'll start to get sick of prices going up because of the vacancy rates and the shortage of stock. They'll then go out there and purchase. Those renters become purchasers. More people are purchasing, more demand, more price growth. Rental income growth, it goes hand in hand with those vacancy rates. Low stock levels, more demand pushing those prices higher. So over the last 3 years, rental income growth for Brisbane has increased 12.1% across all houses. Over the last 12 months, rental income growth has increased 6.3%. So that's just two factors from, I guess, a rental income perspective. However, some of that translates into demand for prices in the future. Now, population growth. Brisbane's population is set to hit 1.55 mil by 2041. Brisbane City Council is projected to increase an estimated 500,000, reaching 1.721 mil by 2046. Queensland itself is set to grow 16% over the next 8 years. So a purely supply and demand issue. If population is increasing, there's going to be more people competing over rental properties, more people competing over properties for sale. It's just a simple supply and demand equation. As that continues to grow, it's just going to continue to create the pressure cooker for growth. All right. And we'll get to land supply a little bit later on. But established properties in established areas in this city are going to continue to become more and more scarce. All right. Now, affordability. Thank you for listening to this episode of the Tailored Property Wealth Podcast. I hope you're learning lots and getting lots of value out of this episode. If you want to discuss the opportunity of working with us here at Tailored Property Wealth, jump across to the website www.tailoredpropertywealth.com.au, complete the contact form, let us know that you're listening to the Tailored Property Wealth Podcast, and let's reach out, let's have a chat and see how we can help you execute on your property goals. Brisbane has overtaken Melbourne. It's a lot more unaffordable than it used to be. However, you don't always just look at it as a city as a whole. Look at that median value, and that's all you can purchase. As a sophisticated investor, you can understand that within different local government areas, there's different suburbs at different price levels. And this is where we can go and strategically target some of those more affordable areas. And we can strategically target suburbs where some of the neighbouring suburbs could be 100 to 200K higher than the median value of those suburbs. And we know if those neighbouring suburbs can get to that level, so can these suburbs over time. So it's being really strategical with that affordability piece and looking in those areas where the median value is well under the average incomes for those areas, because that means those areas aren't up to their borrowing capacity ceiling, and it always comes back price growth to what people can borrow for the majority, because not everyone's out there purchasing with cash. People have to go and borrow funds to purchase property and push prices higher. So if median value is low, income levels are high, we know there's more room there to grow. Okay, so borrowing capacity ceiling is super important. Gross yields. Okay, so Brisbane gross yield 3.8%, Adelaide 3.8%, and then we have Melbourne 3.6% and Sydney 3.1%. So you can see that Brisbane, in comparison to some of those other capital cities, has a really strong yield. That's across the city, right? And then once we get down to specific areas again, we can, I'm starting to change from a 5% gross yield, because as prices continue to rise, that is dropping. So some areas are 4 to 4.5%, and then some areas are 4.5 to 5%. All right, but progressively over time, as capital growth outpaces rental income growth, those gross yields continue to drop. Okay, so it's super important. And like I said, if you're sitting there waiting for rates to drop so you can go out and purchase something, you're going to have a lower gross yield based on that original purchase price. So it doesn't make sense to sit there and wait. You might as well get in now, get in where you have to borrow less money. And over time, the cash flow on the property will continue to improve, because you're getting their rental income growth and because rates will drop in the future. We don't know when, but they will. Cool. So that's your gross yields, right? We always want to try and balance the two with what we do personally within our business and what I personally do within my portfolio. We want to balance and get capital growth, but we're also getting a strong yield where it's not costing us massively in the pocket to hold that property. And what that then means, in 2 to 3 years, that property will get to a position where it's neutrally cash flow or potentially positive cash flow. And then it's not costing us anything to hold that property. Our risks reduce even further again. And long term, we can just hold that property, no worries. I'm sure you've probably heard that Brisbane is holding the 2032 Olympics. We've got the Olympics going on in Paris at the moment, at the time of recording this, and everyone gets pumped for the Olympics, right? So I think when that comes around, this is just from personally what I've been thinking about this week, everyone gets excited for it. So many people locally are going to move up to Brisbane, and even if they're just visiting for the games, but it's going to inject a massive amount of money into that city when that takes place. But there's lots of other things that go on prior and upcoming to that, okay? So massive amount of infrastructure spending going on at the moment. And that's to cater for the games that are coming up, right? So Queensland government committing to $16.4 billion to major capital projects in 2023-24. If you look based on history at Sydney, when it held the games in 2000, between 1997 and 2003, house prices went up 97% and rents increased 100%. So history doesn't always predict the future, but we can get a good understanding of some things that happen when that does take place. Westpac believe that there will be 17 billion and 9 to 10 billion to flood into southeast Queensland and Brisbane. All right. ABS believes in the next 20 years the Brisbane population will get to 5 million people, and 75% of the job growth is going to take place in Sydney, Melbourne, and Brisbane. There's going to be increased jobs and population growth as a whole from everything that's going on there. The more people that come to the area, more people have to look for property to rent, to purchase. There's more jobs, there's more diversified income, there's higher income levels, push those prices higher. According to the state-by-state report, Brisbane's economy will increase 68% over the next 20 years. The combination of skilled workforce, innovation hubs, manufacturing growth, and booming tourism industry, city will reap an estimated $241 billion by 2041. All right, so I was struggling with my words there, but an increase of 241 bill by 2041. Brisbane also boasts 140 innovation hubs, which is the highest per capita in Australia, with world-leading robotics and autonomous systems for research at the moment. So just some positive news there as that economy, right? And a good, strong economy is going to help to push property prices. Building approvals, all right? So Queensland total dwelling numbers is 2,549 lower compared to Victoria and New South Wales. So Victoria, 14,167, and New South Wales, 3,696. So significantly lower dwelling approval numbers than Victoria and for New South Wales. We spoke about it not too long ago, that pressure cooker. So there's massive amount of growth in the population, people coming. However, our building approvals in Brisbane are far lower than some of the other states. So there's lower supply being added to an area, higher demand coming in, that pressure cooker for growth. Infrastructure, there's heaps of infrastructure, but just some of the big ones are the 3.6 bill for Queen's Wharf project. It's set to be completed in August 2024, and Riverwalk in Brisbane now enjoyed by lots of cyclists, pedestrians. So there's just lots of going on really in the city. If you've been to Brisbane recently, you'll see so much work going on, investing in the city, getting prepared for the Olympics that's coming through. I personally love going to the city of Brisbane. I think the city is beautiful. It doesn't have that chaotic feel that Sydney does as well. That's just an emotional thing for me, but I think the city is extremely beautiful. Homely review. So Homely did a study based on 50 years worth of data. Now, this study was from 1970 to 2016, and there's some really good takeaways in this on the average price growth across some of the capital cities over this period of time. Now, it doesn't typically mean that these cities are going to do these numbers moving forward. When we're investing in property, a really just good level that we want to hit consistently long term is just 5% growth, right? 5% growth doubles in roughly a 15-year period. If we can hold for 30 years, then we've got property doubling a couple of times. Happy days, great growth. But between this period of time, 1970 to 2006, Brisbane actually outperformed other capital cities at 9.7%. Sydney followed up really close second, 9.6%, Melbourne 9.5%, and Perth 8.2%. So if you just invest into any of those major capitals for that period of time, you're getting massive, massive growth over the long term, all right? Arguably, it might not perform at those levels moving forward, but pretty much Harvard at 5%, we're still doing really well. So it kind of just debunks that fact, and I see people bang on all the time, Sydney's the best performer always, which is not the case. Sydney typically goes on its run first, followed by Melbourne, but then once it becomes more unaffordable, gets closer to its borrowing capacity ceilings, that's where you see your Brisbanes, you see your Adelaides, and you see your Perths do really well, and they start to catch up. So it's understanding where cities are within their cycle, and Brisbane, I think, is going to do well still. That's pretty much summing up why we think Brisbane is still prime for growth. It's going to continue to perform, and it's a really good long performer. If you're thinking of purchasing, don't know kind of where to target, what to target, etc., reach out, have a chat with us. We'd love to discuss the opportunity of how we can potentially help you with an investment purchase, or if you even have any questions, just want to dive a little bit further into the data around Brizzy, please let us know. But that is it for the episode today. I hope you enjoyed. I love going through the data. I'm a bit of a data geek, and I hope that you enjoyed it too. Thanks for listening. Have a cracker week, and we will see you on the next episode. Goodbye. Thank you for listening to this episode of the podcast. If you don't already, make sure you follow us across all of our social platforms. That can be Instagram, YouTube, LinkedIn, Facebook. I wish you all the best out there on your property investing journey, and I hope each decision you make in purchasing more property gets you closer to your goal of financial freedom.